Hi, I am Ankita, a mutual fund investor, just like you. Today, we are going to ask Yaksha about small cap funds. These funds can deliver blockbuster returns, but hold on, these also belong to riskiest category of funds. Let's ask Yaksha, our wealth doctor, about rules that we should apply. Hey Yaksha, first tell us, what is the most important rule for picking a small cap fund?
Sure, Ankita. But first tell me, how do you generally choose a mutual fund?
I adopt a simple process. I visit any website or investing platform. They show best funds along with their rank, and I choose the top ranker always.
Great. But have you ever inquired how these funds are ranked?
Why should I care? Top ranker means it will give highest return in future, isn't it?
No, Ankita. Haven't you heard many times? Past performance is no guarantee of future results. Most of the platforms highlight previous 3 to 5 year returns and give high weightage to it in ranking. If a fund has generated exceptional returns in immediate past, then most likely it will be underperformer for considerable time in near future. Small cap funds, long-term performance depends on the fact that how a fund picks early stage small companies. Small cap stocks are prone to price manipulations due to lower volume. And hence in good times, every other fund may give exceptional returns, but may result in losses in long term. So, do not select the funds based on recent performance. Here is rule number 1. Look for performance history of fund on a complete market cycle of 10 to 12 years.
Oh, that's an insight, Yaksha. I wasn't aware about it.
Check how the fund performed during steep corrections. Shortlist ones that had fallen least. Here is rule number 2. Give preference to a seasoned and renowned fund manager. Textbook investing, based on reported financial data, does not work in Indian small cap space. In this space, rogue managements, regulatory risks, or a bad quarter can turn a stock from hero to zero. The fact that qualitative inputs required to select stocks do check if the fund manager of your small cap fund has been around for 7 to 8 years and has managed the fund under consideration for at least 5 years. Rule number 3. Importance to quality of research team at fund house. Success in small cap investing comes from unearthing small firms that the market hasn't discovered yet. It requires a large research team to explore the universe of small companies, meet their management, and scan the operations. So, small cap opportunity is best played through fund houses with minimum 10-year record for finding and delivering in small cap space. Rule number 4. Low portfolio turnover ratio. This is an excellent indicator to judge the small cap fund's future performance. In small cap space, selecting wrong firms frequently and then exiting those investments results in huge losses. This frequent buying and selling is reflected in high portfolio turnover ratio of the mutual fund. Whereas, a fund which is careful about what it buys and then has the conviction to hold on for long time is the right fund. And this is reflected in low portfolio turnover ratio. Rule number 5. Low portfolio PA ratio. Steeper the valuation, the harder the fall. If your small cap fund is fan of high PA stocks, then it may be more vulnerable to earnings disappointments and nasty corrections. The average portfolio PA of the fund is a good check on whether the fund is actually selecting the growth companies or reacting to price moves. Rule number 6. The fund mandate. If net assets under management of the fund are greater than 2000 crore. A size of over 2000 crore, in today's circumstances, can limit the number of investable companies for the fund. Therefore, if the fund is much bigger than this, look for flexibility in its mandate to hold higher cash or invest selectively in mid-cap or large-cap stocks. Yes, this will dilute returns somewhat as compared to pure small-cap funds, but will reduce risks to a greater level.
Wow, that's an eye-opener, Yaksha. But what if one does not have time for this much research?
No issues, Ankita. You can visit beyondfd.com and schedule a free online meeting with our experts. Here, our experts will find the right funds based on your goals. Not only that, thanks to our smart analytics, they will also guide you in your investment journey and help achieve your financial goals. And you can check investment value, access investment account, see funds performance till date, check goal achievement status anytime on your mobile phone, apart from many other features or services. We, at Beyond FD, personalize your investment plan according to your goals throughout your investment journey.